Hi, it's Monday, December 21st, 2015. Uh, I'll be talking today about a probable or possible double bottom in the price of gold, and also about Bitcoin, which has been doing quite well recently. We're trading around 440 right now. We are down $21 from the highs of 468 earlier in the day. Gold is trading at 1,068. We did get up to 1,074 earlier in London. It's right now almost 1 p.m. London time, or almost 8 a.m. Eastern Standard Time, New York. Um, so the possible double bottom in gold is between it looks like we formed a double bottom at 1,047, which was the low on the 3rd of December, and roughly the same low on the 17th of December. With that in mind, I've looked at the high on the 4th of December, which is 1,089, and that will be the midpoint of the double bottom or the breakout point. And calculating the distance between the double bottom lows at 1,047 and 1,089, that would be an objective of 1131 in gold. And that, of course, is not like a long-term or objective. It would be just a fairly short-term objective if the 1,089 level breaks in gold. Yeah, I have to admit, the last 4 years have been very difficult because of the manipulation, by the central banks and their agent banks of the gold price. Doing technical analysis on any market has been very tough, especially gold and silver. Um, in terms of Bitcoin, what I wanted to talk about is about a recent article well, there's two articles. The first one is a recent one in Zero Hedge on the 17th of December, and it talked about all of the world's money and markets in one visualization. And it's an article by Jeff Desjardins of Visual Capitalist and the Money Project. And it's very interesting. He basically compares assets, with in an infographic, and at the beginning of the infographic is Bitcoin, which looks like a little dot compared to all the other assets. Well, Bitcoin and silver look quite small, and according to him, the value of all Bitcoins right now is roughly 5 billion, and then silver is roughly 14 billion. And then you scroll down, and you look at gold, for example, is quite a big market cap, 7.8 trillion. And the biggest of all, of course, is derivatives. And he takes a pretty conservative, estimate of 600 trillion, but he looks huge in the infographic. I'll put the link to that article below my video, but the reason I'm talking about that is that there's another article that I found on the internet, and it's called Bitcoin Kills Banking: How It Happens and Why It Will Happen. And basically it's an article by NRHEFN, NREFN, and I'll put a link to that article as well. It's a very interesting article. It's quite long, but the gist of this article basically is that a lot of the big banks are getting involved in Bitcoin because they think they can, be part of it. But basically, this article explains very clearly and very well how it's impossible for the banks to be really involved in Bitcoin. They can't really. The only way they can create Bitcoin is through mining it, and they'd have to do it. And it talks about blockchain, how that technology makes, transferring assets through Bitcoin or the blockchain very cheap, cost-free, unlike the banking system, which is very costly to transfer money or assets. the other thing it talks about is that compares a blockchain to the fiat money system. And basically, blockchain is a ledger, a public ledger, public to everyone, of assets and liabilities, debit and credit ledger. And the fiat money system, on the other hand, is a ledger as well, but it's private because, central banks and private banks, they don't allow, they control everything, and everything's secret, all their ledgers. So basically, the fiat money is backed by nothing, and it's secret, it's not public, while Bitcoin, it is backed by, computer power, because to mine Bitcoins, you have to use a lot of computer power, software. I'm not a specialist, so I'm just, giving you the rough idea. So basically, it's a public ledger, very low cost. So he said, this article talks how much of an advantage that is. And he said the only way banks can get involved in Bitcoin, short of closing down, the World Wide Web with the governments, and closing down, like computers or internet, not allowing people to use their mobile phones. Short of that, this article explains that the only way the banks will be able to get involved into Bitcoin is through helping people who have fiat money in the banks transfer that fiat money through exchanges into Bitcoin. But it goes on to explain that once the banks transfer that fiat money to Bitcoin, they've lost control of it, because Bitcoin is completely independent. The blockchain is independent, and it's public, and the banks don't control it. So they'll get the fees, by transferring the fiat to the Bitcoin. But once the fiat's gone, they've lost control of that asset. They'll never gain control again unless the person who has the Bitcoin transfers it back to fiat. So basically, this article is very interesting because it's saying the banks think they can control Bitcoin, but short of like closing it down, they can't really, because the blockchain is completely transparent and independent. So this article says that it's a Faustian bargain for the banks. They'll make money once from it, but they're not going to control it. And the other really interesting point that this article makes, and it's, I guess, related to the other article about the infographic, is that Bitcoin is so small compared to all other assets. Only 5 billion market cap right now, roughly. And this article says if you converted 100% of global GDP to Bitcoin, let's say the world did all its business in Bitcoin for 1 year, which is roughly $70 trillion GDP, the value of one Bitcoin would be $3,333,333. So, I'm not saying this is going to happen overnight, or it might not even happen. But it just goes to show you the potential for Bitcoin, and even though the price has gone from, I don't remember, pennies or a few dollars to now, over $400. And I've been involved in Bitcoin for a few years. I haven't really, I don't hold many Bitcoins. I've traded it a little bit, but I think it's worth having a few if you can afford a few, or even you can only buy one, Bitcoin, or even less. The beauty about Bitcoin, the price could go to 1 million, and you could still transfer Bitcoins because you have the fractions of Bitcoins. You go behind the decimal point, the bits of Bitcoin. So 0.0001 could be worth quite a lot, in a few years' time. So even if you get half a Bitcoin, I think it's a good thing. So we'll keep an eye on the markets here just before Christmas. Not surprising, gold is coming off now. It's 1,067. It's only up $1. It was up 8 before, but that's usually what happens when the U.S. markets come in. The American banks, they come in and manipulate the gold price. Very frustrating. We'll see what happens though, and we'll keep an eye on 1,089 in gold.